Thanks for coming out to Clive Capital's Q2 2022 webinar. My name is Keshav Kolur, and I'll walk you through what we've been working on these past few months. The presentation will last about 25 minutes or so. We'll leave some time for questions at the end. And so please put your questions in the Q&A box or the chat in the meantime, and we'll address them towards the end of the presentation. And with that, let's get started. So here's a roadmap of what we're going to discuss. First, we're going to go through an imagination exercise. And that's basically just for me to show you why you should be listening throughout the entire presentation instead of doing something more interesting like being on your phone. Next, we'll go through our company introduction and what we do, the current investments we're making and what they're looking like, what Q2 looked like for us at Clive Capital, what we worked on, our upcoming investment opportunities, the work we have ahead of us in Q3, the state of the real estate market, and next steps for you as the investor and how you can take advantage of our very interesting, constantly changing real estate market. And we'll end with a thank you from me for joining me at this webinar today and how you can contact me as well. So just imagine, right? This is that imagination exercise. Imagine receiving $20,000 a month, regardless of whether or not you work, no matter where you are, what you do, whether or not you pick up the phone or check your email, $20,000 a month, right? And you don't have to work a job for that or manage 10 homes for the next 40 years. What would you do with your free time? Maybe you would start a business, maybe you'd make riskier, more profitable investments, pick up that hobby that you always dreamt about since you were a child, or spend more time with loved ones. So please spend 30 seconds, close your eyes, and think about what you would do if you had $20,000 coming in, passively, no work to you. Okay, so open your eyes. Whatever you imagined you would do with your life, your dream life, keep that in mind through this presentation, and I'll show you how you can make that life a reality by passively investing in real estate. So what do? We help people from all walks of life, programmers, doctors, consultants, new investors, experienced investors, and many more, passively invest in real estate. And we do this to help them achieve financial freedom and build that passive income we were talking about just 30 seconds ago for themselves and for their loved ones. And why have we chosen real estate? Here are some of the big advantages that I will highlight of real estate over the stock market, which is where a lot of people are invested in today. One is cash flow. Typically in the real estate investments we're putting together, cash flow will range between 4 to 12, 13% usually. And because of the tax advantages of real estate, you don't have to pay tax on this passive cash flow until years later when you go to sell the property. Second, the big advantage is leverage. The bank will give you typically 75% of your property's price for you to go out and buy your property. And so what that means is if you have a $10 million property and the bank gives you $7.5 million, you only have to put in $2.5 million yourself, then the property's price only has to go by $2.5 million or 25% for you to double your money, instead of the property's value having to double to $20 million all by itself. And lastly is the inflationary benefits of real estate. Inflation is whenever living costs rise, and real estate, a roof over our head, is one of our biggest living costs. So as inflation rises, real estate usually rises with it, and it's a good hedge against such inflationary periods like the one we're in now. And the big major drawback I will highlight is liquidity, the lack thereof. So unlike in the stock market where you can buy and sell with the hit of a button, it's a lot harder to do in real estate. It usually takes 3 to 6 months for you to buy and sell investment properties or even residential properties. So what kind of real estate industries do we play in, right? We have two business strategies at Clive Capital. We invest in apartment complexes, anything that's 75 apartments or more, And we invest in land where we can build 75 or more homes. And 75 is usually our sweet spot because that's where we can start to benefit from economies of scale. We invest mostly in the Southeast, in states like Texas, Georgia, Florida, etc., in landlord, business-friendly markets where markets are growing in population, jobs, new employers coming to town, etc. This is what our current portfolio looks like. We're invested in 300 apartments in Texas, 98 homes in Louisiana, and we'll talk about those later, as well as coming soon, 154 homes in Alabama. So let's start off with the 300 apartments in Texas. This is a value add deal. Value add meaning we're gonna go in to the apartments, renovate the interiors, put in granite countertops, stainless steel appliances, and sell these new renovated, improved apartments 3 to 5 years down the line and net a profit for our investors. And this is a very special one to me because it is Clive Capital's first closing. So very excited about this. And it'll be the first of many. And for our passive investors, their passive cash flow, that passive income we talked about, will begin going out to them towards the end of September, and it'll go out to them for every month for the next 3 to 5 years. Next, we have our 98 homes, built to rent in Louisiana. So what is built to rent? We buy land and we build homes on it. But instead of selling them to people like you or me, we rent them out instead and manage the entire subdivision as a rental portfolio, all 98 homes. And when it comes time to sell in 3 to 5 years, we'll maybe sell off all 98 homes or 20 at a time to institutional and more wealthy buyers. And that's really where our big payday comes and where we can gain a lot of profit for our investors. So we have only $300,000 left in funding. So if anyone you know is interested or wants to learn more about these opportunities, I'm happy to chat with them. Currently, 8 out of the 98 homes are built and 7 of them are already rented and meeting our projections. We're projected to finish the horizontal infrastructure, meaning the water lines, the sewers, etc., by October of this year, in a few months, at which point we'll start building 6 homes a month until we hit our 98 homes. What do the returns look like? So we're projecting a 2.15 multiple in 5 years, meaning, for easy math, if you put in 100K, 5 years later, when we have sold the property, all said and done, you'll have 215K out. And that equates to an 18.3% IRR. So what is an IRR? IRR stands for internal rate of return. And what that means is it's a way to quantify the time value of money. So not only is it important how much money we make, it's important how quickly we make it, right? I would much rather make $150,000 in 1 year than $200,000 in 2 years. The more money you make quicker, the better. And that's what the IRR quantifies. And so the higher that is, the quicker you're making your money back. And lastly, our development spread is 170 basis points or bips, meaning that where the market will be where we project the market to be in 3 to 5 years and where our product is going to come in, these 98 homes, we expect there to be a 1.7% spread between the two. So that's our current investments, right? But how have we been improving the company, Clive Capital? A lot of people ask me how I manage a full-time job and real estate. And I couldn't do it without my team, these guys here. So we'll start off with Andrew Elagarbes. I hope I'm not butchering that. I don't think I am. His past experience includes marketing, social media management, internet media specialist, and he's currently doing our email marketing for us. So if you're subscribed to our newsletter and you're reading the blogs that we write, that is Andrew's work that you're taking a look at. Next, we have Ismail Porleogan, who's our social media manager. His past experience includes tech support, social media management, and general assistant tasks as well. And so he handles a lot of the social media content that we put out. And lastly, we have John Lai on the call here, and I'll let John introduce himself and his experience.
Thanks, Keshav. Hi, everyone. It's John Lai. Delighted to join the team as market strategist. I've been working in marketing and product strategy for the past 15 years or so with both large companies such as Yahoo, Apple, and Amazon, as well as smaller startups. Before marketing, I worked in the world of finance as an investment banker on Wall Street, as well as in high-tech consulting in Silicon Valley. I started out my career as a CPA, so I run the gamut in terms of skill sets. I'm based here in Portland, Oregon, in case anyone up here in the audience are Pacific Northwesterners. Thank you.
Thanks for that, John. Yeah, John and I met at Amazon where we talked about real estate and we really hit it off. I'm really happy to have these guys on board and can't wait to see what we get done. So with that, we will move on to what we got done this past quarter, right? So first, we established an online presence on both social media, which you can see here on the top right, and our website here, clivecap.com, here on the bottom right. We're on everything you could probably think of: Clubhouse, Instagram, LinkedIn, TikTok, Twitter, Facebook, YouTube, you name it. So go follow us. We've also been putting out weekly newsletters with educational content, market updates, and investment opportunities. We're implementing EOS, which stands for Entrepreneurial Operating System, from the book called Traction. And this system is really a guide on how to successfully scale companies. We're also implementing other SOPs, standard operating procedures, so that we can handle and scale to more opportunities and investors. And lastly, we're building relationships with large real estate investors, with debt and equity partners, other investors, and fellow syndicators. So if you're any of the above, please schedule a call with me on my website, which I'll put up later here in the presentation. And I'd love to see how we can work together. So what do we have coming up in Q3? Looking ahead, we have 154 homes, another built-to-rent opportunity in Alabama. We just closed on the land, about 20 to 30 acres, almost a month ago now. This is going to be in Foley, Alabama, in Baldwin County, which is the fastest growing county in Alabama since 2010. What do we like about this deal? We have great relationships with the city officials. It's a qualified opportunity zone, meaning, to my understanding, there's a lot of tax benefits to it. So typical capital gains tax, which you have to pay when you sell investments, is 20%. If you hold on to your investment, though, in a qualified opportunity zone for 5 years, that number goes down from 20% to 15%. Meaning, let's say you had to pay tax on $100,000. Instead of paying $20,000 in tax, you have to pay $15,000 in tax. If you hold on to it for 7 years, that number comes down to 10%. So now you're only paying $10,000 of tax on $100,000. And if you hold it for 10 years or more, to my knowledge, and again, I'm not a tax advisor, your taxes, capital gains tax gets wiped out. So that's 0%. So you save $20,000 on taxes. What do our returns look like? So we're projecting 2.14 equity multiple in 5 years, meaning 100K will turn into 214K projected by the end of 5 years, an 18.3% IRR, and 175 basis point development spread. What we're doing to scale the company in Q3, we're going to continue to build our brand online, both social media and the website. We're going to continue to provide educational value through our newsletters, social media, and introduce a new, more interactive avenue, such as webinars. And we'll continue to bring you, the investor, new investment opportunities. In addition to this built-to-rent opportunity, maybe another value-add investment, similar to the one we closed on in Texas, where we go in, renovate the apartments, and sell it 3 to 5 years later for a profit. So with that, we'll move on to the state of the real estate market. And we'll take a look at first build to rent, since it's half of our business strategy. On the left here, you'll see a very interesting market trend that'll make you jump to get into these projects. Back in 2018, investors paid on average on median, $221,000 for each home in a build to rent development. Fast forward 4 years later now, and that amount has almost doubled to $434,000. So you can see the investor demand there is for these build to rent projects that we're working on. To give you an idea of why that's happening, institutions own about 700,000 of rentals currently. And that's 5% of the market from a report done by Yardi Matrix, who estimates that by, I believe, 2030, institutions will own more than 30% of all rentals, if I'm remembering my numbers correctly. To put more numbers behind that, back in 2021, investors purchased 24% of all single family homes. So not only are you competing with your neighbor to buy that 4-bed, 3-bath, you're competing with investors now, more and more. What else are we seeing in the market? The inventory for sale homes isn't expected to grow substantially because owners are afraid that if they put their house in the market, they might not get another house to trade into. And with mortgage rates increasing, home ownership has also become more expensive. So if you look at the graph here of interest rates, back at the end of last year in December, the 30-year average fixed rate mortgage was about 3.1%. Fast forward to May 2022, just 5 months later, and that's already up to 5.25%. And that difference means almost $430 per month in interest on a $300,000 loan. And not a lot of families, unfortunately, might be able to afford this. And what does that do to the market? Instead of these home buyers now buying homes, they're going to stay renting. And that's the business that we're in, right? We rent out apartments and we rent out the homes that we built. And a lot of this also has to do with cities getting more expensive and cramped, and work is going more remote, right? So people want more space than they would get in, say, a 3-bed, 1-bath in New York City, without the headaches of home ownership, like maintaining their lawns or performing home renovations. And so built to rent appeals not only to the investor, but to the tenant as well. Next, we'll move on to multifamily value add, the other half of our business strategy, right? And maybe it's time to start thinking about adding alternative investment strategies besides the classic value add renovation strategy to your real estate portfolio. Why? One, it's getting harder to find true value add properties. Not many are left with original cabinets, old appliances, etc., where you can go in and perform these renovations and increase the aesthetic of the interiors. And two, our business plays, such as revenue management, where we implement more efficient property management, or we implement RUBS, which is where we build utilities back to the tenants. These practices are so widespread that there isn't much low-hanging fruit anymore where you can implement these cost-cutting strategies. So there's less and less upside to be made on these opportunities. In addition to that, what people have seen who have already bought multifamily value add properties these past few years, what they might see is the effect of these rising interest rates. A lot of people went in on high leverage floating rate loans. So maybe they got a bridge loan at 75% loan to cost or 80% loan to cost with the moving interest rate. And what that means is as our current interest rate increases, so does the interest rate on their loan that they have to pay. And if they're unable to make that payment on their loan, then a couple of things can happen. Lenders will usually do everything possible to not have to take the property back from them like they did in 2008. And this includes loan payment extensions, as well as buying rate caps, meaning you buy a cap on your interest rate so that it can only go so high, or you refinance into fixed rate debt. But both of these options, buying rate caps and refinancing into fixed rate debt, require additional capital calls. So it's not the best option out there. Right? to have to go back to your investors for additional capital. And lastly, we'll end with the macro state of the real estate market. So with these interest rates going up, we'll see the market cool down, but since things move slowly in real estate and trends lag a little, prices will take 3 to 6 months to come down as financing becomes more difficult for buyers. And that'll bring sellers to move their price points lower. And a lot of retrades or price negotiations will also happen as well. We'll also see rent growth slow and vacancy periods increase. We'll see that these rising mortgage rates and larger down payments on these houses that aren't really showing any major sign of a big price correction make home affordability increasingly difficult for the average American, and it'll push many potential home buyers to rent instead. But at the end of the day, it's still a supply and demand issue, right? The National Apartment Association and National Multifamily Housing Council predict that we'll need around 4.3 million new apartment units to meet our housing demand by 2035. And basic economics, right? If you supply the market with what it wants, then the market will reward you handsomely as an investor. So that's why we like real estate. One of the many reasons we like real estate. So with all that said, what would the next steps look like for you, the investor? One, continue to educate yourself and stay up to date with investing trends, right? Investing without education is almost like gambling, in my opinion at least. One way that I'd recommend you stay updated is by reading this book, The Hands-Off Investor. It's published by BiggerPockets, the online premier real estate community. And this is what I recommend for anyone I talk to who wants to learn about passive investing in real estate. I'd also recommend going to their website, biggerpockets.com, where they have a lot of great podcasts and material for you to learn. In addition to that, I would say practice analyzing deals so that when you are ready to start investing, you can tell a good deal from a bad deal. And lastly, a quote that I really like is, education without action is entertainment. So once you've armed yourself with education, take action. Schedule a call on my website, clivecap.com here, and let's talk to discuss next steps on how you can start building passive income for yourself and for your loved ones. And with that, that concludes our presentation today. So here's my contact information here on the left, just a QR code, very COVID friendly. And pay attention before you start adding it to this video here on the right, because it's not completely intuitive. So if you hit Save Contact, Add to Contacts, scroll all the way down, Create New Contact, hit Done in the top right, and Done again in the top left. And you're good to go. That has all of my socials, email, phone number, everything. And that's the best way to reach me. If the QR code didn't work, then here's my contact information as well. And I'll upload these slides so that you can access my socials also. But there's my name, email, phone number, website, and calendar for anyone who wants to schedule a call. If you or anyone you know is interested in learning more about passive real estate investing, feel free to reach out to me, and I'm happy to help you get started and point you in the right direction. So thanks, John, for joining us today to introduce yourself. Can't wait to work with you, and I'll talk to you all later. Have a good day.